All right, good evening. Welcome to tonight's webinar. I'm going to give an overview of the Active Live service, how to best use it, how it works, that sort of thing. So let's get right into it. So to begin, what is Active Live? It is a service for Stockscores active trader members and only Stockscores active trader members to essentially see my analytical screen in TradeStation as it searches for day trade and swing trade opportunities. One of the things I found from teaching people is that there was a couple of hurdles. One, you had to learn my strategy rules. Second, you had to learn how to use TradeStation, and then you also had to be fast and have good process and that sort of thing. And I think that for someone starting out especially, that's challenging. Even for someone who's been doing it a long time, it's a lot of balls to juggle. And so what Active Live is essentially an automated process that identifies action candles on the 2-minute and 13-minute time frame. So even for my own trading, I sit with two computers in front of me, and one computer is the one that you see running the Active Live processes that I'll show you in a moment, and the other is my trading computer. And so I let the first computer do all the heavy lifting, do the work, so that I can focus on getting orders filled and identifying opportunities as quickly as possible. So it's really a helpful service. Even if you're a very advanced trader, it just makes it easier. There's not so much work to do. And it's a way to see all of the entry signals for the day trade and swing trade strategies, the short-term ones, the 2-minute and 13-minute versions, as they happen in real time. So if you subscribe to Active Live, you don't have to have TradeStation, which is a cost that a lot of people don't want to bear. And you don't have to know how to use TradeStation, although I do recommend you try to use it if maybe not in the beginning. Eventually, it is a great piece of software. And then it just saves you different tasks that you don't have to do because some of it is being done for you. There are some indicators and algorithms in Active Live that are not available any other way, and they really automate the process. I have macros running that automate the process to identify trades. I'll show you all that in a little bit. In terms of recent changes, the Active Live typically in the past focused on the worm strategy. So the first change is that I've changed the name of the worm strategy to just simply the Stockscores day trader strategy because it is my core day trading strategy. And another change that was done with Active Live recently is we added swing trade alerts. So every 13 minutes, the automated process identifies 13-minute action candles for the simple swing strategy. And then I've made some changes to the strategy itself for the day trade strategy where we use a market factor. And so now in the morning, before the market opens, 5 minutes before the market opens, I come on with a 2-minute commentary on what that market factor is, whether we should be focused on buying, shorting, that sort of thing. So we'll walk through that process. I'm going to show you all of the trades from today. I'll also show you the trades that I actually took today and the results of that. So stick around for that. So let's jump into the Education Center just very quickly, just to remind everyone where all of this information is located. So I'm in the Stockscores website. I go to the Education Center. I'm not going to go over the rules of the strategy today. I want to keep this presentation relatively short and focused on the Active Trader Live service. But the rules for the strategy are all here. So if you want to see the Stockscores day trader strategy, you log into Stockscores, go to the Active Trader section in the Education Center, and then just click on Stockscores day trader strategy, and you can read all about it. And you can watch the video, as always, and you can print out the actual strategy document if you like. That's also available. So that's there for the day trader strategy, which I will be looking at tonight. It's also there for the simple swing strategy. So right here, simple swing, click on that, and again, there's the lesson that teaches essentially looking for 13-minute action candles from the appropriate pattern. So again, I won't go into the rules of the strategy in this presentation, but that's where you would go to get a refresher on that. And it's very important to go take a look at the day trader strategy document because I did make quite a few changes over the last month or so, and most recently about last week sometime, I I updated some things on the market factor component. And again, we'll talk about that in a moment. So what are the components of the active live screen? Well, we've got a dashboard, and within that dashboard is the day trade long screen, the day trade short, and the swing screen. So let's jump over to the dashboard. So this is what you would see if you are logged into the webinar each day. And of course, you subscribe to Active Live on a monthly basis. And it's on a calendar month, so you can't join 1 week into the month and expect to go into the next month by a week. It's a calendar month at a time. Our next month starts on Tuesday. Of course, the markets are closed on Monday for Labor Day. And so from Tuesday, September 4th until the last Friday of the month, we will run the strategies and processes and all that sort of thing. You log into the same kind of software that you're logged in with this evening. And then you essentially watch my screen. So what is going on my screen, I'll show you tonight, but I just want to identify the different screens here. So we've got the short radar screen right here. We've got the long radar screen for the day trader strategy right there. And then we've got the swing trading radar screen there. And then this is our S&P 500 chart, which we use for the market factor. I'll talk about that in a moment. So let's jump over to the scanner window, because that's a screen that I don't typically show while I am running the webinar. It's there. It's running in the background. Sometimes I'll jump to it just to show a chart, but generally speaking, it's not up while, or it's not something you see, but it's going on in the background. And what happens is every 2 minutes, actually every minute, a process is run to build the watch list of stocks making 2-minute action candles. So I'm going to do it manually. I actually have it automated during the day, but I'm on a different computer now, so I'm going to do it manually. So what happens is when I start the webinar, maybe 10-15 seconds into the trading day, I run this scan, and the list is copied, and then we jump back to this screen, and we paste that in there, and it calculates all the stocks making action candles and identifies the time that they're making the action candle. And I'll explain the fields in just a moment. So we'll let this update. Now, the market's closed now, and it's actually quite a bit slower when the market closes. When the market's open, these update quite a bit quicker. You can see it's taking maybe 15 or 20 seconds, but you get these action candle alerts like within a second or two as they happen. So maybe we'll leave it at this right now, and I'll just explain these different fields. So first of all, we have the symbol, obviously the symbol of the stock, the last price. This is how much it is up for the day. This is how much it is up from the open. And then we have open gap percent. Now I've squished the fields down. Like, I could widen this if I had to, but just so that everything fits, I've squished it down. So that says open gap percent. Let's try to make this a little taller, then we can see a little more. Trade color is how many trades the stock has made at that point in the day. But then it has colors. And what those colors are based on the expected number of trades for the day. So the ideal minimum number of trades is 10,000. I prefer to take the stocks that are on pace to trade at least 10,000 times a day. And the way the colors work, and this is not so much important after the market closes, but during the trading day, is it predicts, there's an algorithm in there that predicts whether the number of trades is going to get above 10,000 or not. It's not fail-safe, it's just a guess, okay? Based on the pace of trades so far, it extrapolates and figures out what should happen by the end of the day. So if it's red, it means it's not going to get above 10,000. If it's blue, it means it's going to get close, and you can see that particular stock there is at 9,018. And then if it's just black, it means it is likely to get above 10,000 trades a day. And so when I'm faced with a lot of different stocks to buy, I will focus in on the ones that aren't red or blue. And then if I have time, then I'll go back and look at some of the symbols that might be in the red or in the blue, because they're lower quality. And if I only have so much time to get a certain number of trades filled, I'm going to emphasize the stocks with the best potential, and those are the ones in the black. Next column is the action candle column. And that's simply the time that the entry signal was triggered. Now I've got it in the order that's reverse of what I normally show. Normally I show it from most recent down to oldest. Because the market's closed today, I thought I would focus in on what was going on right at the open. And so you can see all of the stocks that triggered an action candle at 9:32. It's this group right here. So there were 17 stocks that did that. Of the 17, 13 were liquid enough where they weren't in the red or the blue. And then we have some other factors to consider. Entry price. I recognize not everyone wants to buy Amazon at $2,000 a share. So the price is there so that you can focus in on the stocks that maybe are lower priced. In particular, if you have less capital to work with, they tend to be less capital intensive. But that's actually not the best indication. The best indication is this algorithm that we added called capital, because the capital algorithm actually tells you how much capital you need for $100 of risk. And that's assuming no margin. So you can take the numbers in there and divide by 3 if you actually do use margin. So for example, let's use INSY, this one right here. So INSY at 9:32 triggered an action candle, an entry signal for the day trader strategy. And to take $100 worth of risk required $4,664 position, which was 550 shares. Now again, if you use margin, most brokers will give you 3-to-1 margin when day trading. So you can take that 4,600 and divide by 3. So take $100 worth of risk on INSY would require 4,600 divided by 3, which is, $1,550, roughly almost $1,600 of capital to take $100 worth of risk. All right. Then you have the number of shares, which is the next column right there, so that you don't have to make the judgment on sitting there with your calculator trying to figure out how many shares to buy. If you know that you like to take $200 worth of risk, you take this number, 550, and you just double it, 1,100 shares. If you want to take $50 worth of risk, then you take that number, divide by 2, 275 shares. So it's fairly simple to calculate your position size without having to take out your calculator. Then we have RR. So the RR is the current reward for risk, and it's going to change, second by second as the stock moves. So obviously the market's closed now. That's the end of the day reward for risk. So INSY closed with a reward for risk of 12.22, which means for $100 worth of risk, there was a $1,222 profit on capital required of 4,600 divided by 3, which was 1,550-ish. So that's a great return on capital. For $1,500 of capital, you made $1,200. That's almost 80 or 90% return. That's awesome. Don't get those that often, but it's nice when we do. So then the max RR field was the maximum reward for risk that the stock achieved during the day. So you can see that INSY topped out at 17.61 RR. Not really that important. I do it more out of interest. You wouldn't make a decision off of that, but it's just something at the end of the day to say, what was the biggest winner? It was INSY at 17.6. Then you had VMware, which made a 17.8 maximum. If you're using a trail by 2 until 5, you can sort of figure out where would I have got out. If it maxed out at 7.7, your stop would have been at 6. So rather than make 4.5, you might have made 6 RR using that particular exit method. Now the final column is the drawdown column, and that's useful to know where your stops should be or whether you would have been stopped out of the stock. So for example, when I'm buying right now, I'm using typically a -3 RR stop, -4 sometimes. I'm always checking my data on a weekly basis to find out what is the optimal value. But on the longs right now, it's about 3, 3.2, something like that. So what's useful here is I can see that INSY did not have a drawdown. The minimum drawdown was 0.00. And so it really didn't go backwards after the entry signal. It just kept on going up from the entry signal. On the other hand, this stock went down 6 RR from the entry signal. And even though it closed the day at minus 1.6, if you had a stop at minus 3, of course you would have been stopped out. And instead of losing 1.6 RR, you would have lost minus 3 if you had your stop at minus 3. So those are all the columns in the radar screen. Now we emulate that on the short side as well. So I'm going to delete these. I'm going to jump back to this radar screen where I can run the short process. So it runs a market scan, or not a market scan, a scanner in TradeStation. And I jump over here, paste it in here, and it's now going to do the same thing that we did on the long side, calculate for action candles, and it's doing this in real time so I can identify the stocks that I want to take trades on as they happen. Now again, I've got this sorted from most recent to oldest. I can reverse that if I want, but when this runs during the trading day, it's doing it in the order of most recent down to oldest. And again, you've got your RR, your max RR, your drawdown, position size, all that kind of stuff. So if you have less capital to trade with, you're going to focus in on the trades where the capital required is lower. You're probably not going to take a trade where you need $100,000 worth of capital if you only have 20,000, obviously. So those are just some ways to be able to focus in on the best trades for you. Another thing that I like to do is avoid stocks that make big gaps. I don't care so much on the short side, but on the long side, it's important to me. So if I see in this open gap a number that's greater than 5%, it's not that I won't trade it, but I'm not going to focus on it initially. I'll do my other ones quickly. If I have time, I'll go back to those stocks that made big gaps, and I'll look for a second confirming signal. And so what I mean by that is, it has the opening entry signal, and then it pauses, and then it gives another entry signal. So I don't know if this one did it. I just noticed that it had a fairly sizable gap on the open. Yeah, this is not a bad example. I'll just blow this up so you can see. So here, YINN gapped down. It gapped down about 6%, so it was on my hit list of stocks I don't want to chase. And there's your action candle. I'll just squish this. Oh, that's a 13-minute. I got to make this a 2. This may not work then. I thought that was a 2-minute. Yeah, it's not ideal. Well, anyway, the idea here is that if you get an action candle on the 2 and then it goes sideways for a bit and then gives a second signal, maybe something like this, then that's maybe a second opportunity to short it, or in this case, short it. Sometimes it's a buy, but I just don't want to chase those big gaps. And that means sometimes I'm going to let stocks go. This is a stock that did exactly what I'd like to see for a gap. It gapped up. I don't want to buy that. It paused, and then it had the second break on 2 candles afterward that rallied. Now, unfortunately, I missed this one today. I was just so busy. I didn't get to it in time. Hopefully, they give you 3, 4, or 5 candles before they do this. But that's what you want to look at. With stocks that make these big gaps, is wait for a confirming signal. Wait for some kind of a pullback. This was only a 1 candle pullback. And then, just put a buy stop at the action candle close, and you can get filled later on. Let's see if there's another one here. SMTC, I think, might have been one. Yeah, no, this is not one. Anyway, I don't want to spend a lot of time searching for one, but that's something that I do talk about in the lesson. I just wanted to address it quickly here. All right, so you've got, those are your day trader windows. You've got your long, your short. It's updating automatically. What happens is that, the even minutes, the long list updates. On the odd minutes, the short list updates. And just goes back and forth every minute. I don't manually do it. It's done with a macro that's running through all day. And so, again, I did that to free up my fingers because I'm trying to trade. I'm trying to get orders filled. I'm watching the market, that sort of thing. That process of having to, run the scanner, copy the list, paste it in, wait for it to update. It's not a big deal. It's maybe 10 seconds of work, but it's 10 seconds of taking your focus away from getting an order filled. And I could probably get 2 orders filled in 10 seconds if I was really cooking along. So I'm using the same tool that you guys see. It's automatically running. This screen automatically runs, and I'm watching it. When I see a symbol, I type it in. I look at the chart. I buy it. I look at the number of shares. I'm doing all that work just as you would. All right. So that is the day trader windows. Let me show you the swing window. So again, I have a scan here called Gainers, and it runs. Again, it does this automatically every 13 minutes. So not every 2 minutes. every 13 minutes it'll do this. And it essentially grabs all the stocks making gains that are above their open, and it calculates action candles on the 13-minute interval. Now here we have some human judgment required. So when I see a symbol, AMRS for example, at 9:43, what I do is I jump over to my screen, I take a look at the 13-minute chart of AMRS and the daily, and I say, okay, boring sideways trading, breaking from that pattern, abnormal volume, pretty good daily chart, looks good. That would be one that I would want to buy. Let's see if there's one that I wouldn't buy. I know there were some today. I just got to try to remember one. I think one that started CRMD. CRMD. So I passed on this one, and the reason why is when I looked at the daily, it had been going up for a few days. It doesn't show it so much here. Maybe if I change the scale, I can see that this stock has been, moving up for a number of days. It's not breaking from low volatility, and that's really the check that you have to do for the simple swing strategy. Is you got the action candle alert here. Great. You got some time. 13-minute signals are not as time sensitive. And so take a look at the symbol, decide if you want to enter the trade, and then do so. And that is, I think, for many people who, especially if you're just starting out in trading, trying to get your day trades filled in the opening 2 minutes is challenging. And a lot of people find that they're just not fast enough yet. You'll get there, but it takes time. And so this is a good way to get started, is use the simple swing alerts. You're not going to get as high an RR out of them because they're swing trades. You're going to hold them typically for a few days, but they also not as time sensitive. So, you can have a minute to get your order filled and that sort of thing. You don't have to rush and get that order filled in 5 seconds like you might with a day trade. All right. So that is the third window, which is the swing window. And that's something new that I added maybe a month ago, 2 months ago, fairly recent. Now the final window is just the window for the S&P 500. It's a 13-minute chart, and it has the message candle indicator in white on this chart. So you can see the little white dots there. They're a little hard to see because it's kind of small. But so during the day, this helps us determine whether we are long or short. So in the 5 minutes before the market opens, I come on the mic and I give you my prognostication for the day. So for example, today I said we are in an upward trend, we are gapping down, we are going to open above the trend line, and therefore the market factor rule says focus on buys for the first 16 minutes of the day. I also said if the market rallies for an hour or so, and then it breaks that upward trend with a message candle, look for short sell opportunities. And that's exactly what happened right there. So we had this little run for almost an hour, and then we had the message candle breakdown right there. So that was a signal to go short for an hour. And again, these rules are explained in the market factor component of the strategy. You can go in there. There's 7 or 8 different situations that you need to understand. We also had a short signal right here, another action candle that broke that upward move, not action candle, sorry, message candle that broke that upward trend on the SPY. So again, for an hour, and that happened at 2:30, I believe, 2:30 till 3:30, look for short selling opportunities. So today was a very interesting day because we had buys for the opening 15 or 16 minutes. Then we had shorts for an hour starting at, I think, 11:14 or 10:14. I think it was 11:14. Yeah, 11:14. And then at, I think, around 2:30, we had another signal to go short for an hour. And I'll show you all of those results in the spreadsheet where I compile all of these signals throughout the day. And again, it's all computer generated. There's no bias in there at all. All right. So market factor versus chart analysis. During the trading day, I have what I call my market factor trades, and I have what I call my chart analysis trades. Market factor are blind. If the market factor says buy, you simply take as many trades as you can get filled with your fingers and mouse moving as quickly as you can. I don't even look at the charts. I mean, they come up when I bring them up on my thing, but I don't really give a lot of attention to them. And the results that I'm going to show you in a minute do not factor in looking at the chart at all. There's no human judgment. It's simply if there is, and this is again in the first part of the day, if there is an entry signal, I gotta just bring my list back here, hold on. So let me just grab my worm list here, copy that, go here, paste. So if Apple triggers an action candle at 9:32 or INSY triggers an action candle at 9:32, I just take the trade. If there is a large gap, I might take a moment to look at the chart, or I might just try to do it later. So for example, NTAP, I didn't take that. No, not NTAP. PARR. I didn't take that. It was a 13% gap up. I passed on it. SIG, I passed on it. 13.6% gap. Now SIG, I wish I would have got because it made 4.5 RR, but that's the the reality of trading. You're not going to get them all. Okay, so market factor trades are those where they're blind. It's just if the market factor says go long or go short, you take everything you can. In particular at the open, because at the open we don't have time to look at the charts. It is better if you look at the charts. If you have the time to look at the chart, that's better because why not take a look? But in the results that I'm going to show you in a minute, there is when I talk about market factor, there's no human judgment. Now, chart analysis trades are where I do have the time to take a look at the chart. So, the market factor today said go long from 9:30 to 9:46, go short from 10:14 to 11:14, and go short from 2:30 to 3:30. Those were market factor times. Most days we only do market factor on the opening part of the day. Today it just happened that there was 3 different periods where market factor was in force. Chart analysis trades, is in the middle of the day. I'm sitting there watching this screen, and let's say at 11:44, VMware gives an entry signal. I take a look at the chart, and I say, is that a good chart pattern or not? It's okay. It's breaking a little downward trend line on a pullback from a high. I'd give it a 7 out of 10. It ended up working great, mostly because the action candle wasn't very tall, so the RR multiple was high. It's probably fairly capital intensive as well. Let's take a look. Yeah, the capital intensity you see there because the action candle was quite short. So that is what I call a chart analysis trade. You get a signal, HSY, take a look at the chart, and do I like the pattern? Not really, breaking from volatility, so I would not take that one. So that's where human judgment comes in. Now again, I'm going to show you the results of this strategy in a moment. And in the spreadsheet that I show you, there are no human judgment trades. There is no chart analysis trades. The chart analysis trades are just ways to increase your earnings through the day if you have capital to work with. But when I show you the spreadsheet, there's no human judgment there, and we'll go into that in just a moment. So data. Another part of the Active Live service is I will email you the raw data every day. I don't email it. I actually post it in the lesson. And someone's saying that they can't see my screen, but it's working fine for me. Anyone else having a problem? I'm actually running the presentation on another computer, and it looks fine for me. So, Ken, if you're having a problem, then there's something wrong with your connection. All right, let's get back to it. So this is the raw data, and I give this as a download every day just so you can take those results and massage them, work with them, that sort of thing. I have another spreadsheet which I don't release, and that one allows me to calculate and compile all of the results day by day by day. And I share with you the outcome of that. So I'll tell you what the optimal values are for the day trader strategy, long and short. But what it shows is the, call it the daily profit and loss in I've just added this today actually, in RR terms. So for example, today, August 30th, the longs, there were 17 entry signals. They made a total of 15 RR for an average of 0.8 RR per trade. There were 21 short signals, Again, this is market factor trades, no human judgment, just blind buy them, short them, don't think about it. 21 of those averaging, or a total RR of 16.4 for an average of 0.78. And so today the total number of trades, if you took every single one, not hardly anyone would be able to do every single one, but that's the results for today. 38, total of 31.4 RR, or a 0.8 RR average. And then here's the cumulative total since the start of May. And so here you can see the monthly totals. So they're generally around 400. July was a little quieter, 353. So 407, 405, those are the RR numbers for the month. The number of trades, the average RR per trade, that's without slippage. I would factor in, 0.15, 0.2 as slippage. And then you can see the difference between long and short. So the shorts have averaged 0.72. The longs have averaged 0.61. And again, this goes back to May. I do have the data for April, March, and February, but I have to manually go through and add in the market factor, and it's quite time consuming. So I just haven't done it yet, but I'll do it eventually. But I expect the results are going to be pretty consistent where we're, kind of in that 0.6 to 0.7 RR average and around 400 total RR for the month. That's the summer. We may actually see a pickup as we come out of the summer because there's a little more action. We'll see. I haven't compiled enough data to be able to say so, but it'll be interesting to see how that works out. So, like this is based on the raw data. So if I go into long for today, here's my big data file. You can see on the long side, there's over 33,000 lines of data in here. And, big data doesn't lie. And now I can see, if you see a value here, that means there was a trade triggered. So if we look at the big winner, INSY, it made $12,220 for $1,000 of risk. So 12.2 RR. And it triggered at, you can see the time, 9:32. This is the number of shares for $1,000 of risk. So all that data is there. And so then what happens is it adds it up at the bottom. So there you can see right here, 15 RR on 17 trades, $885 average per trade. Divide that by 1,000 and you get this, 17 trades, 0.88 RR. All right, so that's the data. I show this file every day. At the end of the day, in the last half an hour, we go over this, mostly just to see, to give you the average so you can compare with what you did. So for example, the average today on long and short was 0.83. I did 11 trades today, I think. So what I then want to do is compare what I got in RR terms with what I should have got. So I made 11 trades. If we take the average of 0.8 times 11, that's 8.8. Let's call it 9 RR, right? So 9 RR times my risk tolerance that I used today was $300. So I take 9 times 300, that's $2,700. And then I compare it with what I actually got. And I'll show you that in a moment. If you only did 2 trades today because you have less capital or you couldn't work as quick or you're fussy, whatever, then you say, okay, I made 2 trades and I made 4 RR. The model says I should have made 2 times 0.8, 1.6. So I made 4. The model said I should have made 1.6. So hooray for me! I beat the model. And you can do that by being fussy. So don't judge yourself based on this. Don't say, oh, I should have made 31 RR today. No, because that would require that you take all 38 trades without any slippage. Not realistic. What I like to do is compare what I should have got based on the number of trades times the average and compare that with what the average is. And I'm trying to figure out what my average RR is relative to the average that I should have got. All right. Now, here is the RR growth since May. Anytime you look at an equity curve, what you want to see is something linear, something without a lot of volatility. That means the strategy won't drive you crazy. And you can see that here. We've got a nice linear upward trend on the day trader strategy risk curve, our reward to risk curve. And, starting back in May at 0 RR, 4 months later, we're at 1600 RR, averaging about 400 RR per week or per month. And I would say if you can earn half of that, you are awesome. I set that out as my goal every month, is to earn half of the ideal, because I don't really have an issue with capital requirements, but it's still hard to get all those trades filled. But look, if you can earn 200 RR in a month, that's 50 RR in a week. And if you're using $100 of risk capital, that's $5,000 a week, $20,000 a month. Okay, so those are the results. Now let's look at today's trading. Well, I did that a little bit already in the spreadsheet. Let's now compare that with my actual results, and just to identify, again, what was my average. So I just want to count the number of trades here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So I didn't do 11, I did 12 trades, and I had profit of 3,815. So I take 3,815 divided by 12, is 317 divided by 300. So my risk tolerance is 300. So I had an average RR per trade of 1.06, and the model average was 0.83. So I beat the average. Now I want to make one point, just based on what happened today. I had to go out at about 9:30, 10 o'clock. So I actually closed off all of my trades before I left, and I didn't take a lot of those shorts that came later in the day because I was away from my desk, unfortunately. So I should have made a lot more today. For example, on INSY, that trade closed at, 12 RR, and I made 5 or 6 RR, 5. This is in US dollars, this is in Canadian, so you actually have to multiply this by 1.3. So I think I made 6 or 7 RR on INSY, but if I had held it till the end of the day, I would have made 12. On the other hand, some of these stocks, Square and Amazon, for example, they didn't close as high as this. So, I benefited in some ways by having to leave early, and I missed out on some opportunities, and some of the stocks that I traded ended up doing better than what I did. Okay. So just as a quick summary, and then we'll take some questions. You've got 4 windows here. You've got your short window, this one. You've got your long window, call this short window. You've got your swing window, and then you've got your market factor window. And everything you need to know about how to use those is in the written lesson and the video. And, some of the common questions that I get, I'll sort of anticipate them, is why or how do I, get enough orders filled? Listen, you can only get as many as you can filled as possible. So do as best you can. Fill them as quickly as you can. If you only get 4 orders filled, then worry about how you do compare to the average. And if you have less capital, well, then you can afford to be less fussy, or more fussy, sorry. And then that also means you can, maybe beat the average. Now, someone just asked me about the IPB window. So it used to sit here. We still run it. It just sits in the background. So here's the IPB window for the day. I still post the IPB list here, and it still does the alerts. You'll still get the audible alerts for the intraday pullback strategy, but you won't see this window. And the reason I did that is, I had a lot of people saying I'm not fast enough to take some of these day trades, and so we put the swing trade window in its place. I'll do whatever you guys want. If you would rather have the IPB window, I'll put the IPB window up. If you'd rather have the swing window, I can do it that way. Totally up to you. But my personal sense is that I would rather day trade the day trader window here, like this one, than do the intraday pullbacks. The profitability of these is much better than the intraday pullbacks. And so although today there were some nice winners here, I still prefer to focus my day trading effort on the day trader strategy as opposed to the intraday pullback strategy. All right, let's see if I can get some more questions here. So question, what would be the capital required to take all daily trades? Well, it depends on the day and it depends on your risk tolerance, but let's use today as an example. And we can see that here, I think. Okay, so to take all the longs for $1,000 of risk took $600,000 of capital. Now, for $100 of risk, that would be $60,000 worth of capital to take every single trade. And I just don't know if that includes margin or not. I ask myself this question all the time. If I go back here, let's go up to an actual one here. So this says, yeah, that doesn't factor in margin. Okay, so I'm not totally certain of this, but I think so. For example, for $100 of risk, that's $60,000 in capital. And if you had margin, that would be $20,000 of capital to take every trade. But don't quote me on that because it could be 60 grand. I got to go look deeper into that formula. And I don't want to spend time doing that now, but I believe that's what it was. So when I show that number in the spreadsheet every day, and that way you can get a sense. What I think is most important is what is your percentage return on capital. So if we go to the total, you see the percentage returns on capital here. They tend to be averaging. Well, let's see what the average is. Let's just do the average going back to the start of July. So the average daily return is 1.8%. Now that's not a weighted average, so it's not totally accurate. Let's say it's 1%. Let's build a little spreadsheet here just to show you how to think about this. So let's say we have $10,000 and our daily return is 1%. So we'll just put here 0.01. So let's go equals to, this times this. So it's going to be $100. Then you add this equals to this plus this. And then you go equals to this field. And copy that there. Copy that there. Now, made a mistake. I don't know if you really want to watch me build a spreadsheet on the fly, but I think this is an important thing to consider. So what I want to show is how capital grows. So we're just doing 50 days. So there you go. So if you make 1% on your money, in one day you make $100. And the second day you make another $101. And you make $102, $103. You can see how it grows. At the end of, how many days have we got here? At the end of, let's add one more day, so it's 50 days. At the end of 50 days, that $10,000 has grown to $16,000. Now, I don't want to make anyone think that they can go out and make 1% a day right away. I think that's the model says you can, but it requires great process, very focused, hard work. You're not going to get there in your first week of trading. So, but this is the ideal, is to try to get 1%. I try to get 3% a week. And last week, for example, I made 3%. So that's my goal, is to make 3% a week. And again, if you wanted to do it that way, you could say, okay, how does it happen in a year if you make 3% a week? In 1 year, $10,000 at 3% a week turns into $43,000. That's 400%. So again, I don't think anyone's going to achieve it consistently. I always like to bring down the expectations, but the model is pretty amazing in terms of showing the success rate. This is an interesting column right here. It shows the average profit per day historically using the market factor rules. And so we've had a nice run here. Since the start of August, there's only been one losing day. That was August 16th. In July, there was, I think, 4. July 27th was the worst day, July 16th. So that's RR terms, right? 25. In June had a few more red days. There were 21 trading days in June. There was 1, 2, 3, 4, 5, 6 losing days in June. But still, 15 out of 21 days, that's 65% roughly. All right, let's get some other questions in here. Your spreadsheet shows 17 trades long today compared to 25 trades in the radar screen. So what is the difference? So the difference is, in this spreadsheet, I'm using a minimum number of trades of 10,000. Remember, we talked about that earlier. And so if we go back in here, let me just minimize this. Some of those trades that early in the day weren't liquid enough. So that's why there's fewer of them. I could change this. I could, for example, on the long side, I could change this to 5,000. And then we will have more trades. If we go down now to the, for today, what is it? So now there's 25 there. The average, this is the nice thing about this spreadsheet. I can see what happens if I change the number of trades. So the average is 0.75 RR, right? If I change this to 10,000, the average jumps to 0.8 RR. So we talk about, more liquid being better performance. And you can see that in today, how that worked. So next question, in the interest of speed, can we copy symbols and data from your screen and paste into our trading platform? Unfortunately, no. The webinar is like watching a TV screen. There's no way to copy and paste what you see on my screen. So having said that, I think that would be an extra step that is too much work. You're quicker to just have your trading platform open and just enter in the symbols as they come up on the screen. That's my screen. As you're watching my screen, those symbols come up, just start filling orders. Now, one thing of caution is what can happen. A stock can show an action candle at 9:31 and 20 seconds. That does not mean it will close as an action candle. And so you got to be careful that you do wait for it to close. That's a trade-off, though, because if you wait for it to close and you're not going to get as many orders filled as quickly, you're going to get more slippage. So these are some of the things you have to think about. If you can fill 5 or 6 trades in the opening 2 minutes, you're doing awesome. That's hard. It takes a lot of practice. Now notice that there's way more at 9:32 than at 9:34, and then at 9:36 there was only 2, and then it really starts to get quiet where you've typically got enough time to get your orders filled. How do I fill so many orders so quickly? It is nothing more than practice and process, and I'm always trying to think, how can I make this quicker? Some platforms have hotkeys, so you can just you can pull up the symbol and enter, a hotkey like Control 1 that buys 100 shares, Control 5 buys 500 shares, and you can set up those hotkeys, and that's one thing to do. Next question, you look at every chart to know when to exit a trade. Yes, so I do run TradeStation, and I've got all of my positions open with my RR lines drawn on there, and I monitor those. Having said that, generally you're supposed to just hold until the close. What I tend to do is I will hold until the close as long as the trend of the day is working for me. So as an example, yesterday, if you look right here, I'll blow this up. Yesterday, the market was trending higher all day. So, stick with your longs. Maybe you jump out early there because that trend was broken there. But as long as the trend is working for me, I'll be patient. It's when the intraday trend gets broken that I get more aggressive and maybe use a trail by 1 or something. For IPB, mechanical, or do you look at chart? For the IPBs, I highly recommend you look at the chart. Most of them don't have the kind of chart pattern you'd want to take. So definitely for intraday pullbacks, take that moment to look at the chart. So I think I've answered all your questions. Is more monitoring required now versus intraday pullbacks of old? I'm not sure what you mean by monitoring in terms of the monitoring after you enter or to find them. In some ways it's less work because you can really, I'll take you through my day. So for the opening 15 minutes, I filled as many orders as I could. I think I got 10 because I did 2 shorts later. So 10 trades were entered in the open. And then at a little after the open, whenever that breakdown was, I shorted 2 stocks. By 9:30, I think I exited everything because I had to go. And I didn't want to sit on those positions. So in some ways, I only worked 2.5 hours today, maybe 3 hours. And I was in and out of all my positions and made my, whatever it was, 12 RR. But if you have the time and you want to sit there all day, then sit there all day. In terms of the exit strategy, I don't think you need to sit all day. You're really best, like when I show you my spreadsheet, that assumes holding until the close. And those results are great. There is maybe some potential to improve those results if you get more aggressive and exit positions early if you see the upward trend breaking and you're long a bunch of stocks. So, these are some of the trade-offs. But when I show those results, it's the simple thing. It's just simply buying in the opening 16 minutes, holding until the close. And if there was an intraday signal to go short, like there was today twice, then it adds those, and those are also held until the close. But for example, INSY, it closed at 12.2 RR, but it actually hit 17 RR before the market sold off in the afternoon. So you might have been able to get out a little better than 12.2. Okay, next one. Would the market factor assessment parameters need to be different for the swing trades? So I haven't put, there is no market factor in the swing trades, so you don't use that for your swings. Essentially what you're doing is looking at the chart daily in 13 and making a call based on the pattern. Now, someone asking if I will be sending out a video link to tonight's presentation. Yes, I will. I'm not sure when it'll go out, but it'll go out as soon as it compiles. It takes a couple hours to compile, so I might get it out tonight after I eat dinner, but we'll see. So I don't see any other questions. In terms of auto trading, I mean, you can have an account with TradeStation, and if you can build the automated strategy into TradeStation, then you can have it trade. But most of you are Canadian. I'm Canadian, so we can't have an account with a U.S. broker. Do I have updated indicators for TradeStation? Not recently. I sent it out to everyone a couple months ago, and that's the most recent version. Now, the window that you see, which is, it has this day trader finder, that is not something I distribute. That's only for the Active Live service. So if you want the benefit of that tool, which really does all the work for you, you have to subscribe to Active Live. Can I analyze the market for tomorrow's open? Sure. So thinking about market factor components. So we are in a downward trend. We are far below the moving average, so we are oversold. If the market were to gap up, but not above the moving average, which is at 290.85, I got some in my way here, 290.95. So let's say the market gapped up to 290.40 tomorrow, I would short the open. If it can break the downward trend, so it really gaps up huge, then I would buy the open. But it has to move up above that moving average. If it opens flat, I would short. If it gaps down significantly, like noticeably, then I would be a buyer. So if it gaps down on the open tomorrow, be a buyer. If it gaps up but not above the moving average, be a short seller. If it gaps up above the moving average, be a buyer. All of that I'll tell you in the morning. So if you're a subscriber to Active Live, I'll tell you what to do in the morning, and I'll tell you different scenarios as they play out. And I know the rules. I wrote the rules. The rules are based on data. But as I wrote in my newsletter tonight, I'm still having a hard time believing how well they work. And there's been a few days when I have said, well, I'm supposed to be shorting today, but I'm actually going to buy a few anyway because I just can't believe that it's a good day to short. And I think every single day I've done that, I've been wrong. If you follow the market factor rules, they're working awesome. I don't know if they'll always work. They're pretty new, but they're really working well. So I just tell you what the rules say in the morning, and based on the recent history, we should be following those market factor rules. All right, I think that's all the questions answered. If you have any other questions later on, you can always email me. I'll just show you where to register. So if you want to register for Active Live, go to Stockscores Analysis, go to Active Live Trading, and right there, register online, click there, and just go through the process. It's a two-step process. You purchase and register number one, and then you get an email with a link. You have to then click on that link to register number two. That link is private. It's only sent out to the people who subscribe. All right, so I hope you've enjoyed this. I'm pretty excited about this Active Live service. Put a ton of work into it so that it's automated and it's working awesome. So just wanted to give you an overview on that, and hopefully we'll see some of you in there on September. We start on Tuesday, of course, after the long weekend. Have a great night, everyone, and trade well.